In today's episode, we're going to be focusing on the 5 phases of the Bitcoin halving, because Bitcoin tends to behave in various different ways as we approach the halving event. It behaves very differently in the pre-halving period. It behaves very differently during the pre-halving rally, during the reaccumulation phase, and during, of course, the post-halving parabolic upside. So let's talk about these phases, let's explain them in more detail. Subscribe to the channel for more videos like this in the future, and like the video if you enjoy content like this, and let's dive right into it. So to first explain each of these phases, let's first focus on the first 3 phases. Phase 1 is the pre-halving period, and right now we're currently 182 days away from the Bitcoin halving event in April 2024, and we tend to see lots of upside movement, lots of downside deviation, lots of macro accumulation during this pre-halving period, and this was the case in 2019. So if this is going to continue, then Bitcoin could see some sort of upside, but it could still see some downside volatility as well. But if we just focus on the next phase of the post-halving resistance, this is essentially a reaccumulation area after we've crashed in the pre-halving period. So during this upside and downside volatility, it's during this post-halving resistance reaccumulation period where we've recovered and we're consolidating at highs, making higher lows, in fact, not managing to break beyond the key resistance area. But once we've sufficiently reaccumulated here and sellers are weakening after this halving event, we break out into the next phase, which is this post-halving parabola. This is after we've had that accumulation, that reaccumulation phase, and this is where we see new all-time highs and arguably the quickest increase in Bitcoin's price action and the most parabolic rally in general. So if we were to just focus on 2019 in the pre-halving period, because that's where we are right now, at this same point in the cycle of 182 days before the halving event, this is where Bitcoin was already experiencing some downside, 38%. And the thing about this right now being in the same point in the cycle, if we were to see 30% downside, that's where we'd see Bitcoin revisit the macro higher low for a retest, which would be the 1, 2, third revisit of the higher low in this cycle. 1, 2, 3 is what we've seen in 2019. So a revisit of the macro higher low would be possible if we were to retrace 30%. And at this same point in the cycle in 2019, we saw a 38% retracement. But not only that, at this same point in the cycle in 2015, 2016, 180 days before the halving event, we also saw a retracement, and that retracement was minus 24%. So if we're focusing on this very exact point in the cycle of 180 days before the halving, in 2015, 2016, we saw minus 24% retracement. We saw minus 38% retracement in 2019. Could we not see minus 30% retracement at this same point in the cycle? Because we've seen similar areas, similar levels of retracement in the past 180 days before the halving. So is that not possible? It's something we really need to ask ourselves. Because of course, this 25% retracement in 2015, 2016, it formed the very beginnings of a reaccumulation area, reaccumulation range at highs. And then we just consolidated for most of this pre-halving period. Just notice how most of this pre-halving period is consolidation in 2016, going into the 2016 halving. But then of course we broke out towards the upside. And if we just focus on the 2019-2020 phase, after we saw a retracement to the macro higher low, we also recovered going into the halving event, which leads us to building upon these phases, because we covered 3 phases, but we need to cover the remaining 2. And the remaining 2 are 60 days before the halving event. We tend to see a pre-halving rally. And you can see how this pre-halving rally right over here, we very strongly rebound from the macro high or low, and then we essentially revisit the highs that we've been struggling with throughout the pre-halving year of 2019. So we essentially revisit these highs. And if we focus on this pre-halving rally, which is also around 2 months before the halving event, here it's 70 days, but actually it's a week earlier. So in fact, this is 63 days, just like it is right over here. Just 2 months before the halving is when we see a breakout in price. And for most of the pre-halving period, we saw consolidation, this reaccumulation range here in 2016. And then we broke out from that 2 months before the halving for the pre-halving rally. And after we see the pre-halving rally, we see a pre-halving retrace. And you can see how this pre-halving retrace is annotated with a blue dark circle, a dark blue circle. So you can see here, that's another phase in the halving cycle. And this pre-halving phase, this pre-halving retrace also occurs. And here in 2020, that was a 20% pre-halving retrace. Here, this was a 38% pre-halving retrace. So if we talk about all of these phases, the pre-halving period, the pre-halving rally, the pre-halving retrace, post-halving resistance, and post-halving parabola, the pre-halving period is when we see lots of upside deviation, lots of downside deviation, and also sometimes just plain consolidation. But at this same point in the cycle, we've seen a 24% retrace in 2015-2016. We've seen a 38% retrace in 2019. So if we were to see anything like that, maybe we could drop into 20k still during the pre-halving period. And after that pre-halving period, we'd see a pre-halving rally 2 months before the halving event. In 2016, we saw a breakout from this reaccumulation range to new highs. But in 2019, we had to first crash before recovering in a V-shaped reversal to rally to these highs that we've struggled with for the remainder, or at least the preceding year, really, before entering into a pre-halving retrace, which is phase 3. Pre-halving retrace can be anything from 20% downside to 38% downside, like we saw in 2016. So that's also something we need to keep in mind going forward. But once we clear beyond all those phases, once we're after the halving, we tend to see reaccumulation after the halving event. And the same thing occurs after halving 2016 as well. We're just reaccumulating, consolidating for multiple months, here for multiple weeks after the 2020 halving. So we could see something reaccumulation, some sort of reaccumulation after this upcoming halving as well. And then finally, phase 5, where we see post-halving parabolic price action. Once we break out from the reaccumulation range of multiple weeks, maybe even multiple months, we tend to see parabolic price action towards the upside all the way to new all-time highs. That's where we see parabolic price increases in Bitcoin's price. We see the most emotional phase of the market cycle. We see people FOMO. We see lots of euphoria. Generally, this is the most profitable part of the cycle. It lasts over 350 days. It lasts a long time. And so this is the most enjoyable part of the cycle, where price action is just going towards the upside, and altcoins also follow suit in increases in their valuations. But we have to understand that these are the 5 phases of the Bitcoin halving cycle, and we're currently in phase 1 in the pre-halving period. We could still see lots of volatility towards the upside and downside, but rest assured, as we get closer towards the halving, it's going to be really interesting, because that's going to be preparing us for the post-halving parabola that occurs after the halving event. Lots of still scope for downside volatility, for instance, during the pre-halving retrace period. Lots of scope for upside volatility during the pre-halving rally period, which is 2 months before the halving. And of course, lots of scope for just sideways price action, lots of reaccumulation just after the halving event. But rest assured, all of these phases are going to be working towards and contributing towards the most parabolic part of the cycle, the bull market phase, where we see price acceleration to new all-time highs. It's something to look forward to. I'm excited. Subscribe to the channel for more. This is always a resistance in the pre-halving period. So these blue vertical lines are the halving event, and we always see rejection from this black macro diagonal resistance, which is always at an 8-degree angle across time. You can see that as well. But even in 2019, even if we upside wicked beyond this resistance, we continuously rejected from here time and time again in the pre-halving period. But this, of course, changes in the post-halving period, because we then see that last rejection immediately after the halving, just like we see here as well. The last orange circle immediately after the halving. And then we see a black circle, which is a successful retest of what was once upon a time an old resistance turn into a new support right over here. And you can see this in the retest post 2020 as well. Last rejection and then retest of this black macro diagonal resistance as a new support, and then we see springboarding to new all-time highs. After that retest attempt is successful, and you can see that this springboarding to new all-time highs occurs approximately 200 days after the halving event. This tends to occur and repeat across cycles where we see this breaking to new all-time highs after the halving event, 200 days approximately. So this retest is really important in facilitating that upside into the parabolic stage of this bull run. So going into the halving event, and we have to talk about how few months remain in going into that event, because we have approximately 100 days left. And during this 100 days, we see a pre-halving rally occur 60 days before the halving event. And we also have that 1 month, 40-day period, so 30 to 35, 40-day period where a deeper retrace could occur. And we've seen this in the past. I spoke about this in yesterday's video, so feel free to check out that one. But we're running out of time when it comes to pre-halving retrace. So if we talk about this period here, we only have 100 days left. And so far, this resistance has been a very pivotal one, because even if we focus on the 4-year cycle, this being candle 1, 2, 3, and 4, candle 1, 2, 3, and 4, candle 1, 2, 3, and now 4, in every candle 4, we break the 3-year 4-year cycle resistance. So each 4-year cycle has a 3-year resistance, which rejects price in candle 1, 2, and 3. And then in the 4th year, the final year of the 4-year cycle, we break beyond this resistance. And this has been the case time and again. Candle 1, 2, 3, and 4. This was a 3-year resistance. In this candle 3, we never really quite touched this resistance, but we broke beyond it in that candle 4. We're in candle 4 once again, and you can see how for 3 years, this 46K region has been rejecting price for 3 years straight, even in 2023, rejecting at 46K, and this year we're finally going to break that resistance. So when I mentioned that 46K was going to be the top in 2023, that was very much the case, and that was very true because that was a 4-year cycle resistance. We tend to historically see rejection from that 4-year cycle resistance in a pre-halving year, just like in 2019 and also just like in 2023. But candle 4 is going to change this. We're going to break beyond the 4-year cycle resistance this year. The only question is, does that occur before the halving or does that occur after the halving? And it's this chart that suggests to us that it will probably occur after the halving. Going into the halving event, we could still see upside wicks beyond this macro trendline resistance. Upside wicks, FOMO wicks, in that final hype going into the ETF catalyst. We could still see some upside beyond here. But history is suggesting to us that we're going to simply reject into a pre-halving retrace. And this is where this chart comes in. Are we going to see a deeper retrace in this next 40-day period? Or are we going to see that retrace around the halving event? Because we see a pre-halving retrace around the halving event, but we also sometimes see deeper retracements a few months before the halving event. And it's a very small box now. This is a narrowing amount of time where a deeper retrace could take place, because if we don't retrace during this period, then the only last buy the dip opportunity we're going to have is in this pre-halving retrace around the halving event. So going back here, in the next 100 days, if we see any pullbacking in price, any pullback, any dipping, any retracement or correction, any downside going into the halving event, that will be one of the very final buy the dip opportunities, one of those final bargain buying opportunities before we launch into a parabolic trend continuation. You can see here, prior to 2016 halving, rejection into that pre-halving retrace, and then we curl back up and rally to new all-time highs. In 2019, consistent rejection from this trend line before finally breaking into a new uptrend after the halving event. So could we see some consistent rejection at these highs, upside wicking, going into the halving event, pre-halving retrace around the halving event of around 20%, as we saw in 2020, or 2016 is when we saw a 40% retrace. How deep will that retrace really be? It's difficult to say, but what if this is the diagonal that can't be breached in the coming months going into the halving? If we just continue to maintain these highs, maybe even pull back a bit going into the halving, and then see that pre-halving retrace after the halving event, we'll be able to break above this trend line, turn it into a support, and then rally to new all-time highs like we've seen in the past. And it's interesting because this diagonal is around 45K, 45,500, but this is a dynamic trend line resistance which is declining over time. And 200 days after the halving is when this trend line is going to be representing the price point of 41K. So you can see how just a few months after the halving, this trend line is going to be a little bit easier to break beyond, simply because it's going to represent a lower price compared to the price point it's representing today. So for the time being, history is suggesting we're going to hover around these price levels, maybe upside wick beyond them, but ultimately this is going to precede a rejection going into the halving event for a pre-halving retrace that we tend to see around the halving event. And it's going to be one of those last buy the dip opportunities, because simply we see breaking out in the candle fall to new all-time highs, breaking out to new highs in this cycle. For instance, if we focus on this downside wick here in a candle 4, that's also a factor. And what if that's going to be that pre-halving retrace? This downside wicking that we see in a candle 4, that tends to occur early on in the candle 4. So this is now the candle 4 for Bitcoin. Downside wicking earlier on in the year is a possibility. We've seen it many times in the past. Of course, sample size of 2, but this is all we have to work with. So a downside wick earlier on in this year, that would be very much in line with history. Very much in line also with this chart, which is essentially suggesting to us that we're going to continue rejecting from this macro diagonal resistance going into the halving, and after the halving we're only going to be able to break beyond this trendline resistance and rally to new all-time highs. Of course, the ETF, will that shake things up quite considerably and change the course of history when it comes to these repeating price tendencies?
One of the most popular questions that I ever receive is, does the Bitcoin halving actually matter? Will it impact price when the halving occurs next? In order to understand the Bitcoin halving, we have to go back in time. There was 50 Bitcoin every 10 minutes that came into circulation for 4 years after Bitcoin launched. After that 4-year period or so, the 50 Bitcoin dropped to 25, cut in half, hence the name the halving. Now, Bitcoin's daily incoming supply, the number of Bitcoin that come into the supply every 24 hours, has been cut in half multiple times. We went from 50 Bitcoin every 10 minutes to 25, from 25 to 12.5, 12.5 to 6.25. Now, of course, that's where we are today, which is about 900 Bitcoin a day. But every single time that the Bitcoin halving has occurred, Bitcoin's price has appreciated rapidly within 18 months. You can think of the Bitcoin halving as a supply shock. We go from 50 Bitcoin coming into the daily supply to all of a sudden it goes down to 25. If there's less Bitcoin coming into the circulating supply and the demand stays the same, then obviously price will go up. You don't need to go to very many economics courses other than the 101 class to understand how supply and demand economics would have this type of impact on price. Now, there's an entire cohort of the population that believes that the Bitcoin halving does not matter. Their thought process is aligned with the efficient market hypothesis. Now, the efficient market hypothesis has won major awards, and it is believed to be true by a lot of people. I personally happen to disagree with it though. The efficient market hypothesis is the idea that everyone who has the same information in the market will come to the same conclusion. Obviously, that is not true, in my opinion. That would mean that no matter how much more work you do, you can't gain an advantage in the market. Instead, I actually think the exact opposite of the efficient market hypothesis is true. There are plenty of people who know that the Bitcoin halving exists, but there's plenty of people who don't. There's also plenty of people that know that it exists, but they can't tell you when it's going to happen. And on top of that, there may be many people in the market that not only know that the Bitcoin halving exists, when it is going to occur, but they don't know what the impact will be. And so you can give the same amount of information to two different market participants, and they will come to two different conclusions. That disproves the efficient market hypothesis. And therefore, that means that the Bitcoin halving will have some sort of impact. Now, we can argue and debate how severe the impact will be, but obviously, if you are going to cut the daily incoming supply of an asset in half by 50%, it is going to have an impact on price. As we have seen time and again in history, whenever the Bitcoin halving has occurred, there has been a rapid appreciation in price within the first 18 months. I do not believe that is going to change in the next Bitcoin halving. Instead, I actually think that more and more people will be aware of the Bitcoin halving, they'll know when it's coming, and they likely will get long Bitcoin and wait for that price appreciation to occur. The reason why that could actually have an explosive impact on Bitcoin's price is because the more people that are buying Bitcoin and holding it, waiting for this event, the more illiquid the asset is. And if all of a sudden the Bitcoin halving is coming, the media is talking about it, people on Twitter are tweeting about it, and everyone is waiting in anticipation, then more and more folks will speculate on the halving to occur. Therefore, they will go and they would try to buy Bitcoin. But if there's an increase in demand at the same time that you have an illiquid market and a supply shock, we will get a repeat of what we saw in 2020. Leading into the halving in 2020, I continued to write, tweet, and record videos all about what I thought was going to occur. I was shocked that we were going to get the Bitcoin halving at the exact same moment that the Federal Reserve and the US government was going to conduct massive quantitative easing.
So look, whenever we get to recessive periods or kind of slowing growth, central banks have two tools, right? They can cut interest rates, which they just did yesterday, and they can print money, quantitative easing. And so when they do both of those things, it usually takes anywhere between 6 to 18 months to actually feel the effect of those tools. And what it's going to do is it's going to coincide with the Bitcoin halving, which we can get into what that is. And so we think that cutting rates, printing more money, and then this systematic structure of Bitcoin is going to lead to higher prices for Bitcoin over a long period of time.
Now, we have a major event happening in Bitcoin. Some would argue the greatest event for the cryptocurrency, the halving happening in May. Can you shed some light on what you expect to happen to price here in May?
Yeah, so I've been writing about this now for almost a year, really since last May or June, saying, look, we're headed into an environment where the Fed was going to have to cut interest rates to near zero or zero. They've obviously done that. We've been saying that they're going to have to generate lots of quantitative easing. They're obviously doing that on a historic level. And those two things were to coincide at the same time or near the same time as the Bitcoin halving, which is the incoming daily supply gets cut in half from 1,800 Bitcoin a day to 900. Now, if you go back to 2008, 2009, remember gold drew down 30% in 2008 during the liquidity crisis. But coming out of that, when quantitative easing was announced, et cetera, from 2009 to 2011, we saw a massive increase in price, about 3x, and gold eventually hit an all-time high. Now, imagine in 2009, 2010, and into 11, 50% of the gold miners basically shut off their operations. So 50% of the incoming daily supply just disappeared. It would take a scarce asset, make it scarcer right at a time when all these investors are running to it, and the value of gold would have gone higher. That's essentially what I think is about to happen here. Everyone's going to look for inflation hedge assets, whether it's Bitcoin or gold. As they do that, you're going to get the Bitcoin halving. 50% of the daily incoming supply gets taken away. And so you're taking a scarce asset, making it scarcer right at the moment that everyone wants it in their portfolio. And therefore, I think that it provides this rocket fuel kind of for the future outlook of Bitcoin.
That meant that there would be more dollars chasing fewer assets. And therefore, price was likely to appreciate rapidly, just as we had seen many times before. And that's exactly what we got. Bitcoin went from around $8,000 to almost $70,000, about a 700% price appreciation in that 18-month window. And so, yes, Bitcoin has drawn down significantly since then, but we will have another halving about 2024. And when that 2024 Bitcoin halving occurs, I don't see any reason to believe that it won't have a positive impact on price. Now, I don't have a crystal ball. I can't tell the future. There's risk with all types of investing. As we know, history does not necessarily repeat every single time, but we can use it as a guide for what the probability of the future is. And so, if we see a supply shock coupled with a rapid price appreciation, there is a good reason to believe that a future supply shock would lead to some sort of price appreciation. Now, the severity of that move is where